Alright, what's up, guys? I have some more information I need to put out, and I must put out so you guys understand. So today is the day that I sold all of my Apple shares. Here's the price that I released them at. And pretty much why I sold them is that, I just followed the technicals. I didn't want to get burnt on this earnings report that they're going to have tomorrow. I got burnt on the last earnings report. Apple hasn't reported a positive earnings in 3 quarters. This might be a positive one, but I don't want to take that chance, so I'm gonna go ahead and take my profits, and I'll reposition myself when there's another sell-off. So yeah, I'm just looking for new investments and trades. So right now I'm gonna focus on the trading aspect, and later on I'm gonna focus on the investment aspect. Investments tend to happen every 6 months or so. They open up for me every 6 months, or however I'm looking at the chart, that's when they open up, and you guys will hear about it once I throw the idea out, or once I start talking about it. So so right now I'm at the stage where I have a profit and I'm sitting on a profit. So what do I look for? I look for places where it's not going to be risky enough for me to lose what I just made, and I want to be able to identify the risk. Once I'm identifying the risk, I want to be able to cut that risk. So also, I really don't want to forget this. Make sure you guys are understanding your risk allocation. Make sure you guys aren't investing in those super high risk stocks. Like I had a video on it, the Sub-Zero. Make sure you guys are not making long-term decisions on that. Make sure you're not putting a lot of money into those stocks, because sometimes you might just be in a position where you just cannot get out, because there is not a lot of volume or a lot of people in that stock that are willing to sell, or aren't even aware that the stock is is an actual thing. So make sure you guys are identifying your risk once you see these penny stock plays. So when you see the Sub-Zero, it's super risky. You see 00, super risky. You see 10, super risky. But I would definitely try. I would definitely try the 10 on the RSI, and see what I can do. But I would still say that is the high. Well, I would say that is third on the highest level risk. Number one would be the Sub-Zero, because you can lose all of your money just about. And we're going to leave it right there and go to the next slide. Make sure you just, being straight, make it simple, not complex. So trading and investments are both risky. Just because you bought a stock, it does not mean that you're going to receive a such and such return over time. That stock is not guaranteed to go up over time. That stock is not to continue to be listed on the stock market over time. There's a lot of uncertainties. So investments, you have to look at it. I would say you have to get an understanding of a balance sheet, just the basic overall financial documents when it comes to investing long term. Make sure you're going over those balance sheets, making sure the company's making money, make sure it's not losing money, because when a company loses money consistently, it really hurts the stock price. But just go back, do your research on financial reports, and try to educate yourself, build your education up higher, so that way when you're looking at a financial report from a company, you would already know to see if it's profitable. I would say honestly, look at the financial reports for from years or years past, and see if this company is making money over time, or if it's losing, or if it's I would say breaking even for last year's profits. So make sure you're putting your money where a place it can appreciate over time. So we're gonna get to trading. Trading, I would say, is very risky, but if you're able to cut the risk, I repeat, if you're able to cut the risk, which means they're able to cut the amount of money that you may lose. So let's say I'm in a trade, and I post these videos every time, so you can go back into my history of my earlier videos and you can watch them. Say if I buy a stock at $100, my risk is maybe I could lose $2 because I could lose $2 because I know it might go to 98, because that's what the bottom is. But I know the top is greater than $110. My risk and reward is kind of ideal, because I know I won't lose that much money, but I know I'll be able to gain a lot of money if it does exactly what the stock needs to do. So I know one way to figure that out is daily moving average. Make sure you guys get familiar with the term daily moving average. So make sure you're looking up the 300-day, 200-day, 100-day moving average. Get familiar with those terms. It helps a lot when you're looking at stocks. Also, RSI, they just measures the buyers and sellers. You can look at volume. You can look at, you can look at whatever you want to look at. It should help you when it comes to trading these stocks. I'm looking for I'm looking to trade a stock for less than 30 minutes. If it goes over 30 minutes, I'm looking to get out because it's taking too long for me to make money. It's taking too long. It feels like I might have to hold this thing for over a day, and I feel like the opportunity cost for that is getting really high, because I could be it puts me in a perspective where I could be making money in other positions if I would have sold this stock, or if I didn't play it at all. So yeah, make sure you guys are researching terms. Investopedia has that. Google helps a lot. I repeat, Google helps a lot. If you want to learn more about the stock market, if you want to go way into detail, Google can help you find all the answers. I self-taught myself on Google, and now it's just simple. It's just, it's a second language. So like I said, make sure you guys keep researching. I'll be back with more videos.